Hey everybody, happy Friday. This is Chris Pulver here, 12:50 p.m. Eastern Time. Just wanted to get a video out. It's been a little bit. Just want to do an update. Market's been doing their thing. I've been doing my thing. Here is the SPY trading at 582. Gapped up on the day, came up towards 584.50, faded back a little bit. Maybe a gap fill today. Overall, we're just off the all-time highs on the S&P. The Qs have actually been outperforming. The NASDAQ is up 1.3%. We're just up to some recent intermediate highs here. Not quite back at the July all-time highs, but getting better on the NASDAQ side of things. Next week, major earnings week. We have the Mag 7, most of them. Apple has earnings next week. Apple earnings next week will be on the 31st, I believe. Yep, 31st. We go to Microsoft next week, earnings on the 30th. We go to Google. Google has earnings on the 29th. We go to Amazon. Amazon has earnings on the 31st. Meta next week. Meta, near the all-time highs, has earnings on the 30th. So we're talking probably $15+ trillion in market cap getting flung around in the markets next week, along with a very heavy-hitting earnings week with over, I think the total is 797 companies, but include your handful of Mag 7s. There's a lot up for grabs with next week. We're sitting here just off the all-time highs in the S&P. Is the Mag 7 able to bring it on home? I don't know, because I've been sitting here with a lot of cash ready to deploy and watching this market basically do nothing but cautiously melt up higher. So I'm looking for, and I'm not saying that I want Mag 7 to underperform or the market to, drop the prices necessarily, but I would not mind seeing maybe a little pullback to a 21 or 50 period moving average. If I'm really fortunate, maybe something in here to maintain the structure of this trend and just see if we can find some moving averages. That might be wishful thinking. Maybe the Mag 7 is just the standard solid gains, beats on top and bottom estimates, earnings per shares, revenues are good, there's growing, there's excitement, there's spending on AI. This is going to be the next big thing, and so there's room to run. Maybe that is the case. Well, if that's the case, then the portfolio benefits from a melt up. I'm still cautiously bullish going into the end of the year. After we get through next week with earnings, guess what's on tap? We have the election. We have the Fed looking to cut rates by another 25 basis points. Then we have our first round of November news with non-farm payroll. So the next 2 weeks, I would expect either the markets are going to be so anxious for something, i.e. Mag 7 earnings, i.e. the election and the election results, maybe the Fed. I mean, it could be very, very tight and volatile, or the market can just rip and go somewhere up, somewhere down, and it could be big movements one way or the other. So, nobody knows what it's going to do. I'm just saying that if we end up having some pullbacks in here, I'm looking for closes below, closes above, and then looking for a Q4 rally. I do have some hedges in here to the downside, so I'm playing ES to the downside, MES to the downside. I took some, risk-defined trades, so ES is a broke-wing butterfly. I bought some micro E-mini futures to the downside to hedge out through the election. Putting out about maybe 1% that hopefully has a big payout if we have a big drop. Anyway, and I'll just see what the market does. So SPY is just off the all-time highs. We actually had a fairly quiet week outside of the move from Tuesday's close to Wednesday. That was pretty directional. So Tuesday's close right here. Wednesday, we gapped lower, grabbed some nice profit in the morning, and then we had a good directional play all the way down to my strike at 575. That worked out beautifully. And then same day, we actually bounced back up, closed, chopped around all day yesterday. And then today was a bit of a directional morning. Ended up taking a small loss on SPX and then got most of it back here with a small win. And end up finishing some SPX trades this week, 7 for 8. Had some good earnings plays this week. Earnings plays included IBM. I took a bear put spread, closed out for profit there for about 96% of the profit. I closed it out the day after earnings. UPS was a bull call spread, same thing. 131 by 132 is kind of a 1-for-1, and ended up grabbing about 45 to 46 cents per contract, which was a net, 95, 96 cents when I closed it. So anyway, worked out pretty nicely on UPS and IBM. Also had a nice win on Tesla. Tesla's earnings did not disappoint. I had a 225 by 220. It was trading for as low as 50 cents today. Price is still going higher. So I went ahead and took the majority of the profit. I think that was, if I had let's see, my net profit would be like 216. divided by 2.69. Yeah, about 80.2% of the profit, and my expiration was out to November. So I'm taking the profit, staying capital efficient, and I redeployed. So I have a new trade on here. I essentially just did an at the money at 270 by 265. I went out to the end of the first part of January, because if we end up seeing this thing hitting resistance and falling back down, I will manage this long put. I still want to own some shares of Tesla. I'm just looking to see if and when I can own it. Where is it at? Of course, if there is no pullback on Tesla and there is no likely assignment, then guess what? If we break this area here, then this is open space on Tesla. $400+ I mean, I would put in a lot of credit spreads and bull call spreads. I would be pretty active with options, looking to generate some income here, just to see if we can maintain a trend. But what I have here in my chart, so we're making lower highs, we're making higher lows. This could certainly hit some resistance and then fall back into these gaps, and that's okay, because I'll own it maybe in the low 200s. If I get really lucky and I can own this thing below $200, then I'll repair the stock overall with some ownership and covered calls and try to walk away with some bucks. But Tesla was a good trade this week, so a little earnings love never hurts. We go into the bond market. I actually was watching to see, the 10 years at 4.2 were 60 basis points off the lows. I am legitimately concerned that something in the bond market is going to tell the equities traders that something is broken. Example being this: if the 10-year yield continues to go higher, the last time we had this run up on the 10-year, the market was tanking in 2022. Okay, now we hit this level. We saw some points where the Fed was starting to look to cut, and the market started to price that in. Well, that happened this year too, right? All the anticipation from the September rate cut, and as soon as that rate cut happened, this market bottomed out and has jumped up 60 basis points. Now, I think what the market is telling us here is that the Fed is supposed to be super, super dovish and super accommodative and cutting rates all the way down to low 3% by the end of 2025. What I think the reality is if we go to inflation, okay, we look at the year-over-year inflation rate. We are sitting here at 2.4. I don't believe that we are going to get down below 2%. And so my concern is that over the next 1 or 2 months, 2.4 might be the low. Okay, this goes back into 2020. I mean, here we are present. I have a feeling that we're not going lower necessarily, but rather we're going higher. And if we're going higher, that's why the yields are showing they're leading the way. Yields are up, bonds are down. That's a concern that is still going to pinch the consumer, is still going to cause a slowdown. It's still going to mess up the real estate market. It's going to be a hindrance to borrow, and refinance. So all these like big picture restructurings could be challenging if rates and yields continue to go to the upside. That is one thing I'm watching in the background. Also on credit spreads, here we are with J&K. This is high yield bonds, so your AAA, Bs, and Cs. Is there enough liquidity there? I saw something this week that the credit spreads are as tight as they've been since 2007. And I don't know if that means, well, that's good, and then they're super tight, and then they break loose, and they get a lot wider, and there's less liquidity, or if this continues to tighten up and we carry this into Q4, Q1 because things are resilient. Banks are being stress tested, so on and so forth. So I'm not sure, but this is one thing I'm watching. If we have some scares in the market, this usually is a good sign to watch. So giant drop here during COVID, giant drop here consistently throughout 2022, and we have been working our way higher. So if we have a big plummet here, then sure, we're going to have a little pullback in the markets. But obviously, if it just keeps going higher, then everything looks pretty good to stay the course and continue to grind. What else do we have here? Initial jobless claims, continuing jobless claims. China's come back a little bit this week. So HSI stabilized up about 0.5% today. We look at Alibaba up 1.2%, still 1.26, still showing a red candle on the day, but a gap higher. Baidu at 90.19. I'm still looking to see if China's willing to lift animal spirits by the end of the year. If they do that, they might have to be a little bit more vocal. They might have to another 100 or 200 billion dollars. That's US dollars, the equivalent of like 5 trillion won. If they inject that back into the economy to kind of put in this floor, if they do that, great. I'd like to see another rip on, all these stocks. And if I get another rip here, I do have some exposure on these positions. I have Baba, I have Baidu, I have FXI, I have KWeb, I have JD. So I'm trying to think, do I have anything? I think that's it. 1, 2, 3, 4, 5. Yeah. So I have those 5 stocks and have had those stocks for a while. Had some nice profit when we had that big rip earlier with the China move. But I'm sitting here wondering, like, okay, do we have a a push up, a push down, a stability, and then come back up to retest highs. Do we hit higher highs? We'll find out. If we get here by the end of the year, if we get back to these highs by the end of the year or higher, then I'm likely going to take some profit. And I mean, I like the upside potential. I like the asymmetry. I mean, technically, this is one of the cleanest looking charts I could find. The issue is nobody likes China right now. Nobody wants to invest in China. I'm certainly not happy with this type of movement and then just fading that all the way back down about 70+%. So, am I confident? Confident? Not necessarily. If we come back in and we hit these lows, okay, well, we test these lows and maybe it's still this. Maybe it's this, maybe it's this, maybe it's this, maybe it takes a little bit longer. We carve out some lows and then this ultimately does make its way back up. That's what I'm watching on the technical side. I am willing to keep some exposure, but I'm certainly not going super heavy. I took some partial profits on some JD positions. I took some partial profits on KWeb and FXI. I've trimmed down some of my option trades. I'm still holding shares on Alibaba and Baidu. But anyway, that's the China play right now. Gold, silver, dollar. Let's talk about dollar first. Dollar has had 16 candles bullish for 19, and that's a crazy good streak. I don't know when the dollar is going to turn, but I'm watching it. Okay, I think the dollar, if we have some some ruffles in the bigger indexes, perhaps the dollar continues to get a little bit stronger. If we come back into this resistance area or all the way up here towards 107, I will be actively looking for a turning point on the dollar to sell. But right now, I feel like I can't call the top right here. That's insane. There's no confirmation to sell. I want to see price action be more supportive of something where we can get this thing to top out and then start to sell back off. Otherwise, it's likely a range trade. There's levels here. There's levels here. I'd be much more eager to sell it up at those highs with stop losses above. Oil, 71.54. There appears to be some pretty strong support. I am out of my trades on CL, so I was trading oil futures. I was out of those trades with this little rip we saw during some of the geopolitical tensions in the Middle East. I am looking to see what oil does. I think the inflation story as well is going to have oil written all over it. If oil goes higher lows, higher highs, inflation will remain sticky. Okay. Not to mention that we have PMI numbers coming up. You've got China adding stimulus. You got the Fed cutting rates. There's tons and tons of money that's still flowing through the system right now. So if we see higher highs and higher lows, I think the inflation number starts to get stickier, becomes more of a concern. Maybe the Fed doesn't look as bearish and dovish, not bearish, but dovish going into 2025. But my concern with oil is it's not ripping to the upside on Middle East tensions. The supply is coming in hot where the U.S. is producing like crazy, as is Saudi Arabia. Saudi Arabia's talked about bringing oil prices down, as low as $50 a barrel or lower. And those prices, U.S. and Saudi Arabia might be the only two countries in the world that can produce and profit even at a sub $50 barrel. So if we break these floors or these lows, is it possible that inflation does actually reduce? Maybe. But I think, it's very choppy right now. I don't know. I'm worried that there's so much supply and it's intentional. Like, let's produce as much as we can. Let's try to keep energy prices low. Okay, so that's one way to tame inflation while other things are going higher. But if this catches up, then I think inflation is 2.4 might be the lowest we see for a while. So I am pretty nervous going into let's say Q2 summer 2025 with inflation getting a lot higher and the Fed all of a sudden pivoting to say we got to start pausing again. We got to start raising perhaps to make sure that we don't let this get too bad and we got to be restrictive again. Like, this whole thing could be very, very dramatic. Natural gas, fudge. I was hoping natural gas would come down to find some alerts for me. Hasn't happened yet. Gold is just hanging in there at all-time highs. This is another one. I take a look at all these stocks that I'm following, all these instruments that I'm following. This is one that I can't buy gold at a 21 moving average. Come on, man. This has been such a good trend. This area was easy to get long, took some profit. This area was nice consolidation, easy to get long. So I'm looking to see if this at least repeats, something like this, where it stays sideways and then we can go higher highs, we can build up and accumulate. The flip side of that would be that we actually pull back a little bit, find some dynamic support in here, find some past resistance becoming support, and then look to see if we can start going higher on gold. So I still want to add to my gold positions, whether it's GC or GLD. I'm also long on PHYS and CEF. Silver, same type of thing. Measured move on silver for me for a big tranche of shares would be around $36 on silver. If we go to silver futures, I'm trading some bull call spreads and credit spreads. SLV, I'm still long and holding with the target at $33. Bitcoin, this is going to be an interesting story to finish out the year. Of course, curious with inflows and risk appetite, global liquidity, all these things. If we have global liquidity on the rise, money supply increasing, it tends to work its way into Bitcoin. If Bitcoin can break these highs, are we able to see a run? There's lots of resistance here. Are we able to see a run? If so, watch this indecision. Maybe that's a nice little bull flag area. And if we break above some fresh highs and we take out all-time highs, is this the surge that we have to the upside towards 100K or beyond? Maybe, right? But we've got to see price prove it. If not, then we start just pulling back, pulling back, pulling back. I still like the halfway point of this range. Worst case is we kind of come all the way back down into the 50s. But I still think that is a good spot to be accumulating until this hopefully will break and go higher in the bigger picture. Okay, one stock that's been interesting that is highly correlated with Bitcoin, but it's taking on a mind of its own is MicroStrategy. This stock is just killing it to all-time highs. When Bitcoin was getting back to these channel highs, MicroStrategy went ahead and broke all-time highs, and then we pulled back quickly. But look at this on a daily time frame: the 21, the 50, the 100. It's like, come on, man. I'm hoping that we have enough volatility in MicroStrategy to find this. Can we find past resistance to become support? I hope that we can. So I'm looking for that type of trade. We have earnings next week on MicroStrategy as well. Not a Mag 7, but definitely one thing that Bitcoin enthusiasts will be watching out there. And so far, a lot of income plays near the downside. Volatility is pretty solid once we had this chop in here. Lots of ratio spreads, lots of bull put spreads. And those are all good for income. I'm just trying to make some more money as this thing's been up from one. This has doubled, right? From these lows, we have gone up over 100%. So yeah, I definitely want to have some shares on the books, but just wanting to try to find some better entry prices. Ethereum, I'm looking to see if Ethereum can get back above $60. Ethereum here, 28.15. The Nikkei has been choppy. The DAX has been slightly higher, but still kind of choppy and quiet. The FTSE has been an absolute just chop suey indecisive chart. I'd love to sell strangles on this thing. It's been just incredible for the last several months, doing absolutely nothing. The Hang Seng, like we talked about with China, trying to stabilize, and we'll see what happens here with China by the end of the year. So, like I said, to recap for today, Mag 7 next week. Not all of them, but most of them. There's a lot of market cap getting thrown around, 797 stocks in total. And on top of that, we get through earnings week with a big Mag 7 week. We also get right into the election, the Fed, non-farm payroll. So for the next couple weeks, I think it's going to be pretty interesting. Certainly stuff to watch. I will be grinding out as usual. So that'll do it for me. Happy trading, lots of profits, and I'll see you all soon. Thanks. Bye.